Joining us now in a CNBC exclusive, there's a Digital CEO Wes Cummins. We'll talk about what this deal, of course, means for, a lot of different things. Let's start off there. $5 billion, 15 years. Why don't you ever name the tenants?
In some of these instances, confidentiality in the agreements don't allow us to name who the tenants are. In our first lease, we named CoreWeave as the tenant. But David, on this, for a hyperscaler, investment-grade hyperscaler specifically, that's most of the companies that we target. There's really only 5 in the U.S. in no particular order is Microsoft, Meta, Oracle, Amazon, and Google. And so that's really who we're targeting. But in this instance, we weren't able to say who it was.
Understood. And right, so we can pick and choose. We can guess from those 5, of course. Right. Either way, they're good for the money, which is obviously what's important, or at least the lease payments, I would assume. Polaris 1 is up and running. This is Polaris 2, correct?
That's correct.
So 900 acres. Initially, 200 megawatts, phased with 2 buildings. I mean, what gives you the confidence you can build it so quickly?
So we started down this path a couple of years ago, and we stubbed our toe a few times, but I think we've really dialed in the process of the ability to build at scale. We have 700 megawatts of critical IT load currently under construction. Part of that is to go into operation actually later this week, and then over the next 18 months. And the goal is to just continue to grow that number of megawatts under construction, and that we deliver. We have a 4 gigawatt active pipeline. Other campuses, negotiating with these similar hyperscalers on those campuses. So we think we have a lot of momentum in the business. We've dialed in the construction process, which is very difficult to do. We've secured the supply chain. We have the power. We have a new capital partnership with Macquarie. And so we've put all the pillars in place to actually go and execute this at large scale really rapidly.
And the capital partnership, is that what you're going to be relying on in terms of the funds to actually build these factories, so to speak?
Absolutely. So Macquarie, big name in the space, big infrastructure investor. They've been in data center for a long time. We announced a $5 billion funding. That's the equity portion. So when you think $5 billion of equity, that actually unlocks $20 to $25 billion in total capital and gives us a long runway to go and build all of these facilities that we need to build. Capital-intensive business.
Do we need all of them? I mean, I was at a conference yesterday, and Gary Cohn, vice chair of IBM, was saying we're building too many data centers. Eventually, it's going to become. First of all, they take a really long time to come online, and then and as that happens, it's going to become more efficient and easier to do. We might not need all of it.
Yeah. So what I would say to that is, I think there's a lot of announcements of data centers being built. There's a natural gate in the industry of power and supply chain to actually build and put these online. And so what we do very carefully is we try to talk about what are we building, what have we contracted, what are we actually going to put online, and what are we actually going to operate. But I will say I agree with you that there's way too many announcements, but there's a lot of big, grandiose announcements in the market, but we're really focused on actually what we can build. Long-term contracts. These are 15-year leases, both cases. These are really non-cancelable. If they want to cancel, they have to pay us the full 15 years. So for me in our business, it's about getting that really stable lease with a high-quality offtake and growing the business as big as we can. But right now, the demand, feels unlimited. But I think part of that is the actual supply of what comes online versus what's announced to come, to be built.
More
are two different things.
Than actual
there's absolutely more announcements than building.